Well, one reason for the sell-off was a sharp slide in healthcare shares. Why? Well, because last night the Treasury announced new rules that make so-called tax inversions harder. Those are the deals some companies have used to skirt U.S. taxes by buying a foreign company and then moving the newly combined firm's headquarters offshore. Drug, biotech, and medical device companies have been the most ardent users of inversions. Some, with pending deals, were among the hardest hit today on the stock market. Medtronic down 3%. It aims to buy the drug maker Covidien for $43 billion and rebase to Ireland. A 2% drop for AbbVie. It's looking to buy the drug maker Shire for $55 billion and move to the UK. Shire also down 2%. And UK-based AstraZeneca fell nearly 5%. Pfizer, as you may recall, tried to buy that firm and invert for $120 billion, but was rebuffed. Eamon Javers in Washington has more on the nuts and bolts of the Treasury's proposed regulations, and Meg Terrell is on set with a closer look at the impact on the drug industry. Eamon, to start with you, what are these new rules the Treasury introduced? I know they're a little complicated.
Yeah, they're using words like spin versions and hopscotching to describe the techniques that they're trying to stop here. But what Treasury is doing here is changing the IRS rules that govern how companies can engage in inversions and blocking some of the most common tactics that companies use. The idea here is to make inversions a lot more expensive for companies, so they'll choose not to do it. What they couldn't do is block inversions altogether. That would take an act of Congress, a change of the law, and they don't have the votes up on Capitol Hill to do that. And Capitol Hill doesn't seem like it's going to do anything now between now and the election that's coming up in November. So they said, you know what, we've got to move now. Treasury took the action yesterday, and this will be effective as of yesterday, Tyler.
Meg, you've been on the phone all day contacting a lot of these companies that do have deals in the works. So what do these new rules mean for them, and what were they telling you?
Well, it's not really clear right now. There's a big question mark over all of these companies' heads, and there's at least 5 big pharma companies in the middle of these inversion-type deals. So they've announced them, but they haven't yet closed them. They were expected to close in the fourth quarter or the early in 2015. Some of those include AbbVie and Shire, Medtronic and Covidien. Ones you mentioned, these are more than $40 billion deals. And what I'm hearing from analysts and bankers is everybody's reassessing right now. And while a lot of these companies say they would have pursued the deals anyway because there were things that they liked about the target companies other than just their positive tax rates, is that they might want to renegotiate the terms of the deal, specifically Medtronic and Covidien. They might want to change the mix of debt and equity. And if they can't reach an agreement with Covidien, if Medtronic can't, that might ruin the deal altogether, analysts say. So there's a lot of question marks going on here.
Eamon, are these new rules the Treasury has proposed subject to challenge? Could anybody fight back against them?
Yeah, there's some expectation here that there might be a lawsuit, excuse me, particularly from some of the companies who have deals in process that are now effectively blocked by this. But some folks I'm talking to in Washington say this appears to be very carefully written by Treasury to make sure that they stay within the 4 corners of their legal responsibilities here as Treasury and not getting too far into something that would be a law change. So the expectation, at least among folks I'm talking to here, is that this would survive a lawsuit. On the other hand, some of these companies feel like they've been wronged here and they might want to test it in the courts.
And is that what you're hearing, Meg? I mean, will these companies go the full mile and test it in the courts?
That's some speculation among analysts like ISI Group's Terry Haynes. He was saying today that it might take one of these companies that's already in the middle of a deal to sue Treasury, saying it doesn't have the purview to put these rules in place, or it's not doing it the right way, and to try to put a stop to these rules coming into place. But even today, we saw renewed speculation that Pfizer might try to do an inversion with activists. And Bloomberg News was reporting this story. They're saying Pfizer's not deterred by these potential rules, so we could still see more of these. What we're seeing now is uncertainty, and that causes some of these to take a pause and, of course, hits the stocks.
Meg, Eamon, thank you very much.